Okay, so you guys might be looking at the chart and be like, what is all this price action, right? That was because we had a bank holiday today. On top of that, I ended up to looking for trades and actually executing trades today. But I ended up losing my first two trades because of price action, and the third trade was actually a winning trade, but I still ended up getting stopped out at break even, as you can see here. So let me just break down everything that happened. So we had this huge push to the downside when market opened because on the 5 minute time frame we had the fair value gap here that price tapped into. That why we see all this huge bearish reaction. But after 20 minutes after market opened, that was when price started behaving so sluggishly and on non-volatile at all, and still creating this rubbish price action that we have here. So this was the first trade I took. As soon as price dropped all the way down, we took out this daily low right here. As it. So that was my sell side liquidity right there. That price took this daily low. I saw that price taking that. I marked out this 1 minute fair value gap right there that ended up getting inversed because as price was pushing, I ended up taking my buy trade right there. And on the S&P 500, we didn't fully inverse that fair value gap. And that's what's going to lead us to the second trade. So as soon as price started to inverse this fair value gap, I took my buy trade right there. But as I took my buy trade, yeah, so don't worry, I'm going to show you all the screen recordings after the breakdown. So my stop loss was right here, and then I was targeting all these targets were literally my previous target right here. This was my previous target. So my TP1 was at this high, and my TP2 was at this buy side right there. But price just started pushing up and started coming down. When price was coming down, this is what was going on, right? So what do we see here? Let me take this out. Let me take this out. So what do we see here? If you look at the S&P 500, right, this high took out this high, but the NAS100, this high didn't take out this high. So that's creating a 1 minute SMT to the downside. Now, when I saw that SMT, I adjusted my stop loss so low right here at this low, maybe believing that price might actually just push to the upside or price might respect the SMT, right? So after I adjusted my stop loss, I actually ended up getting stopped out. So when I got stopped out, I just paused for a little bit and waited to see what was going to happen next. So on the S&P 500, we saw this fair value gap here. So I believe that if we have an SMT and we inverse this fair value gap, definitely we should keep on pushing to the downside because overall we've been bearish since market opened. Right there, as you can see, we've been really bearish on the day. So and also because we've had small retracement, huge push to the downside, small retracement, huge push to the downside. So I'm believing that we might have this small retracement, have this inverse, and have it pushed to the downside. Because overall, too, if we look clearly, we have not inversed this fair value gap here at this time. We have not inversed this fair value gap here, but NAS100 has inversed this fair value gap. But because we have that SMT and this inverse, I believe we should start pushing to the downside. So I ended up taking another trade after seeing that push to the downside. So I ended up taking here, putting a sell trade right there. My stops at this high, my first TP at this low, right there, sell side, and my second TP at this daily low right here. But as you can see, in the next 3 minutes or 4 minutes, we ended up getting stopped out. So at this point, I'm like, yo, what is happening? At this point, I should have literally stopped trading. I should have come to the realization that today is a bank holiday. We might not get the best price actions, right? But still, I decided to take one last trade, and this time I meant it. I literally said, if I take this trade, I am done. But still, that still breaks my rule because I am still not supposed to take any trade because I've already had two losses, right? So in a way, today I broke my trading plan. So when price was pushing, you remember what I said? We had an SMT, right? So as soon as we take out this high, we have cancelled that SMT. So that's literally what happened. So my bias previously was bullish because I was looking for some trades to the upside. So when price took out this high, I knew that the SMT was cancelled and ended up sticking with my original bias, which was bullish. So as soon as price took out the high, I ended up taking my last trade. My entry was right here. My stop loss was at this low. My first TP was at this high. My second TP was here at the buy side liquidity, and my third TP was at the 8:30 open right there. So as you can see, this price action. Like price was moving so slow. Like yo, we do not see this on a regular day. So when price was moving so slow, I just got pissed off and I was like, so we have a breakaway gap. My stops is at this breakaway gap. My first TP would now be at this high because it was the equilibrium level of this range. So I just decided to put my first TP right there. And you see, we ended up hitting TP right there. And then my second TP and my third TP didn't get hit. So I ended up putting my stops so aggressively to break even because of this trash price action and trash price movement. And also because we were respecting or we were rejecting off of this fair value gap right here. As you can see, we didn't close as a body of this fair value gap. We just started consolidating inside this fair value gap. So I just really went so aggressive on my break even right there, and it ended up getting stopped out at break even. So that was basically today's trade that I took today, and this is the live recording of the trade that I took.